Let's get to the final trade of the day with Mike Patton of Funder Trading, where he is the head trader. Always good to see you, Mike. And what's your trade of the day?
The trade I have for today is Apple. Now, of course, all of us are familiar with Apple. We probably have an iPhone or know someone who does at least. So I do think the company is due for a rally from where it is now. It's pulled back from the high of roughly 157.38 recently after earnings. Earnings did come out fairly positive. So I do think that we're going to see support in the general area where we are now, which is around 146.50. So I do believe that we're going to see the stock continue to find support between about 143.97 to about 146.47. So I do believe right now it's a pretty good buy, and I'm looking for upside to 172 or higher. However, if the stock does not continue to perform well, I would definitely say it's time to exit if it's getting down to about 130 a share.
What do you think about the market action?
So far, we've been seeing a lot of bearish action. I do think now we've got a double whammy with, on one side, we have the concern for the stock market with the FOMC raising interest rates. Every time we get a good number for unemployment or manufacturing or anything that looks good on paper that usually would be considered a positive for the market has to be considered a negative right now because it gives the Fed more incentive to continue raising rates. However, we also have the problem of seeing some indications of a potential recession coming. So those two things, it's like you get one bit of bad news that suggests that maybe a recession is coming, so that's not good for the market. Then you get another bit of good news that says the Fed may continue to raise rates, which is also not so good for the stock market. So in short, we did have a little bit of a recovery bounce recently, but I do think we're kind of getting to the end of that now, and we're probably going to see more downside going forwards, but we'll wait and see. But for now, I would say any hopes of a continuation of the rally that we've seen since the beginning of the year most likely is not going to play out. So you have to be really cautious about which stocks you choose. They have to be really high quality at this point if you want to buy and hold. So that means the pool of possible opportunities get smaller. So we'll have to be a lot more careful going forwards of what we select.
I like how you were talking. Thank you, Mike.
Absolutely. Thank you, everyone.
Go to businessfirstam.com for where to see our show on TV.